everyone, Larry Lavrenchis for Ichimoku.co and ForexTrading.tv with the daily analysis for light crude oil futures for the trading day ending Monday, November 25th, 2013. Well, a significant downtrend that this market's been in for quite some time. We had breakout down below the cloud in early October with a bearish breakout and a very good trading signal based on the longer term time frame with Ichimoku. The market for that period of time was trading well below the Kijun-sen, and that's the pink line here, represents the medium term time frame based on Ichimoku, and the market hasn't traded anywhere near that Kijun-sen for a long period of time. We have seen the market trading down below the Tenkan-sen for most of that trading period, with the Tenkan-sen acting as an area of support. But in the recent past, we've now seen the market with some excursions above the Tenkan-sen. Initially testing above there and being rejected from there, but in the last few trading days we've seen the market closing above the Tenkan-sen, and here 3 trading periods ago a bullish close above the Tenkan-sen, and that suggests that there has been a decent change in sentiment in this market in that short-term time frame. Whereas for today's trading we've seen the market test down below the Tenkan-sen, and now we've seen for the second consecutive trading day the Tenkan-sen act as support. So it is suggesting that there is a good possibility of this market perhaps rallying to higher levels. Now, any attempted rally by this market may be resisted by the previous support that we saw around this swing low, these troughs around the 96 region, so we could see some resistance coming in around there, but we could also see some resistance around the Tenkan-sen, which is trading just above that area, so some potentially strong resistance. We also have for today's trading resistance at that 94.63 level that has been in a region from the past and has held prior to this strong breakout above it on multiple occasions, but that breakout above may have been fairly significant. We've also seen the market finding support at 93.25, and even just down below there at this 92.67 level. Now, just recently there was development of something of a pattern in this market, and it was a complex head and shoulders pattern, and here we have the prior trend leading into the pattern, the congestion area, the left shoulder, which is a complex one, the head, the right shoulder here. We draw the neckline through there, we have the breakout and the close above the neckline giving us a buy signal, but the market retraced back to the neckline, found support as we'd expect to see in a copybook type trade, but then the market is now, for today's trading, has been trading through the neckline, and it sort of does negate the pattern to a degree. It suggests that there isn't a good likelihood of that pattern completing. There is a possibility of it occurring. Now, if we had entered long trades based on the close above the neckline, our initial stops would have been here down below the head, so we'd still be in these trades, and upon the retracement back towards the neckline, one would enter more positions pyramiding into the position. Here I suggest that if we do see some strong bullish activity up above the neckline, and especially above the highs of these candles around the 95.63 level, it could be an area where, based on the copybook trading method for the head and shoulders pattern, it could be a copybook area to add to positions. But I actually suggest that that type of pattern is probably incorrect, and what we have here is a rectangle pattern, and that's basically a sideways pattern. It's a congestion area that has a fairly well defined upper boundary and a fairly well defined lower boundary. The lower boundary isn't as well defined as the upper, and we could probably extend that lower boundary down to about that swing low down around there, that trough, but the upper boundary is fairly well defined, with the market not being able to close up above these highs and being rejected from there. So what we're looking for here is a potential breakout to the upside, and the breakout by that, I mean, what we want to see is the market trading above that area and closing above that area. Confirmation of a pattern is a close above or below the boundaries of the pattern. So we're looking for a close there, and with a bullish close we would have much more confidence in the potential for that trade to reach its target. The target would be the depth here of the pattern projected up, so it would give us a target if we do have an upside breakout up around this swing high, roughly about the 98.78 level. There is a possibility of this being a continuation pattern as well, so we do need to watch that for a close down below the lower boundary, so that could be significant if that occurs. So in terms of Ichimoku, we have a bearish market in both the long-term time frame and the medium-term time frame by trading below the Kijun-sen and the Tenkan-sen. The market, however, is very indecisive in that short-term time frame now by hovering around the Tenkan-sen here, the green line, and suggesting that there is a possibility of this market trading higher with this change of sentiment of trading and closing above the Tenkan-sen, which was out of character with what we've seen in the recent past. And looking to the Chikou span, that's below the corresponding price action, so it's suggesting that there still is some negativity in this market in terms of momentum and supporting these bigger picture trend with the longer term time frame and the medium term time frame being negative. What we may see here is the breakout to the upside, the market find some resistance either around one of these levels that I've already mentioned, or even up to around the 98 level, and then selling off once again. But with this very substantial support that we have down below, we should see some the market halt around one of these areas. If we do see the breakout to the upside and the market come off, then the zone around these highs where we saw the previous resistance, we could see that hold as a very strong area of support for this market. But getting a little bit ahead of myself here, we do want to see breakout away from this congestion area, and we can't preempt the market until we see that. We should be really biding our time and looking for that to occur. In line with the market trading down below the Kijun-sen and the Tenkan-sen, it's likely that eventually the market will test back down here to lower levels. But with the strong support, there is much doubt about whether that will occur.